Hi, everyone. Good turnaround Tuesday. How's everyone doing? Payman, Brock, Prabhash, what will be the topics about the Euro USD? Okay, whether the topic today will be whether or not the United States should adopt the Euro. Hello, John. Dota. So let's talk about Turnaround Tuesday. Anyone who believes in Turnaround Tuesdays? Maybe it's just a myth, from the old days when people used to make markets instead of machines. Those mean machines, those robots. The only robot I like was in Lost in Space. And I know you guys are too young to remember that show. Anyway, so I think there's a good chance for the dollar bounce to turn around here on Tuesday, potential turnaround Tuesday. I think is currency-wise could be the dollar as a whole. Warning, warning, Will Robinson. Here's the Swiss, which, as you can see, did not make a higher high. We got a lower high here, all right, which is kind of a tell to me. And then when you look at the euro, the euro's not as weak as a pound. That's kind of a day where I don't mind fading euro weakness. If euro was down about 40 and pound was only down 18, I wouldn't be attempting it. Some people are saying, what do I think about his speech? It's hard to keep up. Which one? He does speeches all the time. Euro's making a double top. Okay, well, it made a double top. That's old news. You must be reading some analyst stuff. Anyway, here's the euro. 15-minute divergence. 1 hour divergence. 4 hour divergence. So euro risking about 50 here, which isn't a lot. I don't know. I think that if you don't, if 50 pips is too much to risk, I have to pose this question to you. Unless you're a day trader, then I understand. You're going to look for entries where you're risking maybe 10, 15, looking for 20, 30. But if you're looking for a move, maybe the euro back to, the double top that Prabhash is talking about, back up here, then the question I had, this double top, well, the question I have is, if you can't be wrong for a day, which nowadays I think the 50 is bigger than the average trading range that we're getting in euro. Can't be wrong for a day. How could you be right for a week? What do you think? Okay, I'm still trying to be patient in oil. I'd like to see one more high up towards 61.8. Doesn't mean it'll happen. We're going to have Shy Girl here with us Thursday, and she's going to be talking energy with us. A pretty good guest today. That'll be his first interview with us, Lawrence Leopard. So if you're a hard money person or you're interested in the mining shares and you want to hear what Austrian economists talk about, stick around for that at the top of the hour. But I'd say that's the cleanest turnaround Tuesday would have been, fading Swiss strength or taking a shot for maybe a turn in the euro. We'll see. So
the only type of economists that know what they're talking about, by the way.
What, Austrian?
Yeah.
Okay. Yeah, so is that, how old is that philosophy?
Let's say that it was well established like 100 years ago.
Okay.
But Hayek's work during World War II, was instrumental
For the during the war, or
during the war. Yeah.
okay, on how people manage their economies during wartime or all times?
No. It didn't have to do with that.
It had nothing to do with the war. It's just when he was around doing this.
Yeah, exactly. Although he mentions, the war and the social and political conditions of, the era.
Did he
Um,
think that war was good for an economy because it ramped up industrial production? I mean, there are some people I'll say, oh, there might be a war, and they go, oh, that's
you
good
know,
for the economy, right?
it's good for you to mention it because it is one
Ridiculous.
of the most preposterous examples of how
Was
how
that
flawed
Keynesian?
of how flawed and
Keynesian?
stupid the recent interpretations of Keynesian economics is, because
That's right.
I doubted that Keynes would believe in that, because I mean, you don't need to be an economist or have like deep knowledge to realize that when you hear like, okay, we had a typhoon, so we had like
Yeah,
$2 billion of damage, so
we had to
that's going
rebuild. Yeah,
that's going to boost the economy because we're going to have to actually spend $2 billion to to fix the
yeah.
damage. And it doesn't need for somebody to be an expert to realize that, listen, you're going to spend factors of production to reestablish something that was already there. So yes, you're going to have an expense. You're going to have you're going to boost your GDP to do what? Based on credit, most likely to do what? To reinstate
What you already
things
had.
as they already were. So how exactly is that productive? You know what I mean?
Yeah. Well, getting back to war, um, also Edwin Starr. Do you know who he is? The Edwin Starr School of Economics. You know what he thought about war?
What?
Steve, ever hear of him?
What?
Edwin Starr's School of Economics.
Nope.
War. Good God. What is it good for? Absolutely nothing.
Okay.
See, Ziggy. Ziggy used to, you know, do the Freddy to it. Gefilte fish?
You always
Huh?
try to find an excuse to start singing.
What's that? War. Good God. What is it good for? Absolutely nothing. So that's my school of military economics. So I don't know. What do you think, Blake? You were in the infantry. Is war good for the economy? He's completely tuning me
That's
out.
the argument. I mean, that's the argument. Like whenever there like war
Yeah,
breaks
yeah.
out,
Is it Steve thinks it's ridiculous? Yeah,
I think it's ridiculous too, but that doesn't stop the fact that the markets go up, and
yeah.
everybody's like, oh, it's going to add to GDP, and I think
It's ridiculous.
but everybody looks for reasons why the stock market's going to go up. So
Well, they don't have to look far. Every reason.
yeah,
Every
right.
reason is rational.
Every reason's the reason why to buy stocks, apparently.
How are you
Yeah,
today, bro?
I'm good. It's so slow. It's the market's waiting for Trump today. We have
What's his speech today?
he's speaking not at the New York Economic Club, and people are expecting comments about trade and China,
Okay,
and
EU.
more importantly about EU auto tariffs, and
Okay.
that they're thinking that he's going to postpone those about 6 months.
Welsh
I
thinks he's going to not go 50, but go like maybe 10%, a smaller percentage
what do you mean? I'm sorry.
on the tariffs, on auto tariffs.
Oh
Go with a
yeah.
low number, like 10%. I forgot what the threat is, but
Well,
lower.
the bottom line is he's probably going to inject some volatility in the market. The problem, I was thinking about this. You know, and
I
politics
hate it.
are not, and it doesn't matter. This comment is not for where
Political.
It's not political. It might sound political, what I'm
You're
about ready to
neutral.
say.
I know you're.
It's about, yeah, but it might sound political.
Yeah,
but
because it sucks.
Well, I'm going to tell you right now. I hope he doesn't get reelected, because I am so sick of the market's stalled everywhere, and the markets don't want to do anything when they don't know. Uncertainty is the market's, Achilles heel, and so no one places.
Yeah,
quote
tape
unquote
bomb because
bets.
of Twitter bombs.
Yeah, these the indecisions, the negotiating, the Twitter bombs, no one's willing to place bets, and I just really want markets to go back to normal, and they've been anything but normal.
It's a great point, Blake.
And it's driving me bananas.
Well, because it affects our wallets.
It does. It's really, I was just well, and the reason why I was you mentioned that Chi Girl is going to be on Thursday. I just saw a tweet go by, and I'm sometimes I'm looking at Twitter, probably literally less than 10% of the time of my day I spend looking at Twitter. I glance at it every once in a while, see if there's anything new. Then I'm back looking at charts and, reading other analysis. And but I just happened to, you mentioned her name, and then I happened to see
she's going to be here Thursday.
Yeah, it said in here, I'm going to read it for you. U.S. farmers in crisis turn to high interest loans as banks pull back. Financial stress is mounting in the Farm Belt, pushing more growers to take on high interest loans outside traditional banks that stay in business, via the Wall Street Journal. I thought that was really interesting, but the problem is and that made me think, like, man, it's like, I know it's tough in the Farm Belt, and I think that actually, and again, this is not meant to be political. It's just I think that a lot of Middle America is going to have a little bit harder time grappling with Trumponomics for his second term, because I don't think things are turning out quite the way that they had hoped. Whether it's for manufacturers.
Yeah, they're also for we're entering the big shopping season, right? Even though all year is a big shopping season.
Yeah.
But they're saying that people are the women are mainly the head of the household, where they watch the spending that in the U.S. and they're saying they're going to spend less on Christmas this year because they're noticing everyday goods going higher. They're talking about meats and fruits and vegetables. So that is eating up some of their disposable income for Christmas gifts, even though we know, Blake, people, when it comes down to it, they'll make an emotional decision and buy, but they have that reservation too, just like people have the reservation and make big commitments in the markets because of this. There's a lot of that going on.
Yeah, I don't know. There is. I think it's going to be an interesting. It's going to be a very heated political year, obviously. And I'm just saying from a trading perspective, as a trader, I'm really hoping there's a change in leadership, and it's just because every moment we sit here and we wait for this China-US trade deal. We've been waiting for a year, and volatility is. This is just to give you an example. This is the euro dollar, guys, and this is what has really happened since the beginning of the trade war. This is it. A very low volatility. I was looking at this. Here's a chart. This is a Bloomberg euro volatility weekly chart. We're near historic lows. Wow. And this is, you can just see like the last. Let me draw it here. Edit, draw. I'll just use
pretty much since 2016, since the election, we had a few spikes in there, but pretty much headed down there. Yeah. Okay.
Yeah, I mean that is the
what I mean.
Lack of volatility. You can see, life, obviously pre-Trump was better because you could make decisions. You could go, okay, why am I buying the euro, or why am I buying the dollar? Why am I buying the yen? Why am I selling the yen? Why am I, there's reasons, and it was a macro reason. Everybody got behind it. And, yes, there's still volatility, obviously, but not
like before.
Not like before. So, before, we had at least trends in the markets. Right now we have zero trends. And and it's hard for me and you to make money. And like I said, if we have to deal with another 4 years of this, hopefully, something gets done and maybe we can, move on. But it's been a tough couple of years from as far as trade goes, and you can see that lack of volatility in the euro dollar. We just have no direction. And yes, if we get past Donald Trump and you go, well, look, everybody's bringing their rates to zero, there's going to be other things that move the market, like maybe things stabilize in Europe and they have to raise rates because inflation's rising, and then we can all go, oh, okay, the ECB is not so dovish. They look like they're going to get hawkish, maybe for the next 6 months, and then the euro rises for 6 months, or vice versa. The dollar, the Fed actually is going to continue to normalize rates, and Europe's going to stay flat, and Europe can't raise rates, but the US might, and the euro drops to 110. That would be great. But the bouncing around between 114 and 110 in the euro dollar is maddening, and there's no direction. When you think there's direction, when you think that something's going to evolve, it doesn't. And it's hard to trade in this environment. It really is.
Well, wasn't part of it also before even Trump, the central planners kind of took a lot of this away from us, and this has only exacerbated it.
Yeah, I would actually argue that as well. But
Okay.
I would argue that I would agree with that argument. But as you can see, let's just take the last, here, I'm going to zoom out, let the data catch up here.
Yeah, at least you had moves 140 to 102.
Yeah,
back up to 20. Yeah.
We did. We had moves in the market where you could see that we had clear-cut trends that had developed for 6 months to a year, and it was, now it's just a grind, and it's a tough environment. Makes it tough for everybody. So but we'll see. Today and like yesterday, we sat here all day long. Now I know yesterday was partially because bond market was closed, but really everybody's like waiting. Okay, we're waiting till Wednesday till Trump has his New York Economic Club speech. There's nothing to do for the next 2 days. Great. Now we take 2 days off, and then after the speech, what are we going to do for the next 2 days? We're going to wait. Hopefully we get some some news on China over the weekend, or maybe next week. And so here we go with like 1 day of potential volatility, and then we just sit for for days. And then if something moves the market, whether it's CPI or something, it'll revert back to the mean 12 hours later. So why even get involved with a trend? And then the market is capped by options, gamma, everywhere, because everybody knows that the euro is not going anywhere. So you just write options, big options that expire within 30 to 50 pips of where current price is, all over the place. And so the market's like surrounded with gamma. So we need some sort of trade deal to loosen up the market and volatility.
Yeah, make those option writers pay for picking up nickels off the sidewalk and have the steamroller run through there.
Right. And yeah, we're gonna have to have some event that knocks this volatility back up, off of these historic lows, because once we can get off these historic lows and volatility starts to pick up again, that's when you have less options written, and you're right, you have to have those option writers get blown out, and then realize, oh crap, I can't do that anymore, and then we might get some volatility loosening up. But right now there's nothing to do. And it stinks.
Blake,
yes.
One of the conversations we had with Mark Yusko and Stelios 2 days ago at night is having to do, since you opened the Trump conversation, having to do with volatility, is that we had a common understanding that the market is really not pricing in at all. I mean, it reminds me of the pound situation that the pound was pricing in only negativity until we started seeing some signs, and then we had that rally. So the market isn't pricing in at all the possibility that Trump is going to lose, and his place in the presidency might be taken by somebody like with a very socialist agenda. So I think that before even we get the elections, when we start getting closer to the elections, if the polls aren't good, we're going to get a lot of volatility if the market has to violently reprice, who the next president might be.
Oh, I agree with that. I agree. I totally agree with that. Well, look, one of the things they're going to be very was going to shoot the whole equity markets in the feet is if you start looking at a Elizabeth Warren presidency. But there are some newcomers that are throwing their name in the game, and you got
Bloomberg, for
obviously
example.
Bloomberg, and you have another entrance. I didn't even know who the hell he was. It just came in overnight. I have to go back and do a little research, but really, who's going to pressure Trump right now? I don't see anybody in the field. So, and that's a personal opinion, obviously. But yeah, I mean, if there was somebody with a more socialist agenda, yeah, stocks would come under pressure. Dollar would probably come under pressure too. But if they look like they're more of a front runner, but right now, I don't see the possibility of Trump losing at this point. But that can obviously change over the next several months. Regardless, so just technically, I'll talk about a couple of things, and I'll turn it over to you guys. The euro looks like we're going to drift down to 110. I've been looking for a move down to below 110, 109.90, 109.70. I might be willing to try to pick up the euro on the long side down there. Let's see if we can get down there. Gold actually looks, I was looking at gold too. Gold still looks weak. Gold, I think, is going to trade down to 1420. 1420 would be the flag support. I still think this is a very bullish formation. I think the place to be long gold is going to be down here at 1430, 1420. You could probably draw it something like that. You can actually go something like that, or maybe even if you want to get a little bit more longer term, you can say, oh yeah, maybe 14, 10, somewhere in this neighborhood, I think is where gold is going, somewhere right through here. And you have to imagine if a US-China trade deal gets done, you're going to, phase one gets done, gold's going to come under pressure, at least initially. So I think that's where gold's going. Well, also, you look at the US dollar, Japanese yen. The US dollar, Japanese yen, frustrating everybody. I have no exposure to the yen. I'm just looking at it from an agnostic point of view. If you're bullish, you're probably like, break out already. I can't believe it. We're trading right at the 200-day moving average, and we have this bullish setup. Why don't you break out already? And if you're bearish, you're all thinking, well, look, it keeps failing up here, but it's still not breaking down. So you want to talk about a currency pair that is really probably driving both sides of the market to pure insanity would be the US dollar, Japanese yen, just hugging around this 200-day moving average. And like I said, a China-US trade deal would put the US dollar, Japanese yen probably higher. But if we have to sit here and wait for, the next week or two, maybe longs finally, throw in the towel and give it up. And then the dollar yen moves back below this 108.50, which is where the upsloping trend line's at. But if you think that gold's going down, which I think gold's going down to like I said, 1430, 1420, that should put the US dollar, Japanese yen higher towards 110, I would think. But we'll have to see. We'll have to wait. There's, nothing that's, that's screaming to me right now, I need to be buying the dollar yen, or I need to be selling the dollar yen, or nothing screaming to me with gold like I need to be shorting it, because I think the risk reward on shorts is not good. But then again, we're not at a level where I think I should be like, oh, I want to be buying gold down here either. And that's the same with the euro. If the euro drops another 30 pips from where we're currently at, I'm interested. But where we're currently at right now, I'm not interested. So this is a situation where we end up waiting again for the market. Like I said, I'm really in the camp that I hope volatility picks up soon, because I am going to go outside and rearrange my garage later today if something doesn't move. that's what my day is going to end up being. It's I've already rearranged my sock drawer enough. Now I'm going to move to the garage and find something to do, because what happens is, and I was telling traders in our chat room, don't get tempted to trade for no reason. Don't force trades. This is not the time that you want to be forcing trades. As tempting as it is to, you could talk yourself into the market all day long. Like, ooh, the Eurozone, we're only 50 pips from support, so why not get long here? Well, it's like, well, why don't you just wait for it to drop another 50 pips and try to get long, or I want to get, long gold here. Well, why don't you just let it drop a little bit further and get long at support, right at support, and just try to be a little bit more deliberate and accurate with your entries, and don't second guess yourself, one, but two, let price come to you. Don't force the trade. Let price come to your entry point where you want to be long or where you want to be short. And I hope that helps. So with that being said, that's really all I wanted to say today. It's like I'm just looking around waiting for something to happen. Hopefully we get some volatility today after his speech. So Steve, Stelios, how you guys doing today?
Good morning.
Good morning.
Good morning.
I actually agree with you. Sorry, I was going to say I agree with you on gold. Remember when it was 1550 or whatever it was, and I said I think if it goes anywhere near the breakout point, which is what 1360, 1380, I think it would be a gift. And look, it's heading there. So I think we're probably going to get a flush down there, maybe with a trade deal or whatever the thing is going to be. But I think we might get there. Anyway,
it's possible. I mean, if there's a China-US trade deal announcement, I'm assuming we could trade down to that 1380 pretty quick, maybe down the 200-day moving average. It would totally what's the word I'm looking for? It would invalidate this flag pattern. But yeah, I mean, it would be a quick, boom, boom type of deal, I think. So yeah, we'll see. Yep. I guess
we had I think last week it was the biggest weekly outflow from GLD, the ETF, in years from gold. So people are actually getting out, which I don't get. But yeah. So I think positioning is changing, sentiment is changing quite a bit. So
well, if they are, I mean, really have to think about like the move in gold really hasn't reflected that, right? I mean, the pullback, I have to admit, has been very minor, despite this flush out in gold. I think it's been very minor. So anyway, Steve, how's it going with you?
Yeah,
good, Blake.
Good.
Everything okay?
Yeah, just waiting for the market to do something.
Looking at grass grow, paint dry.
Yeah, it's a little maddening. Other than that, things are good. I actually took my kids to the mall yesterday to go hang out and with girls. That was interesting. And I got to play invisible for like a couple hours. That was always fun.
Story of my life, man. Playing invisible.
Oh yeah, that's an invisible dad. Anyway, and the one that and the instant ATM machine. That's what I am. All right, guys. Well, everybody have a great day. Good luck today. I hope we get some volatility. Let's all pray for it. I'm not one to usually pray for things, but in this case, I'm going to pray. All right, guys, have a great one. And remember, if you guys have not visited Forest Park FX, they are our partners are the ones that help us continue to give you this free face webinar. So if you haven't visited Forest Park FX, make sure you do so. They're out there, you know, helping you find a broker to fit your needs. And also, if you want to be part of the reimbursement program, you might be able to qualify for it. And this, you could, you know, find it right on our website. This talks directly to them if you connect through them through Skype or their email. So give it a whirl. You have nothing
May
to
the
lose.
Lord bless us all with volatility, like Morrow.
That's right. All right, guys. Good luck today.
Thank you, Blake.
All right.
Thank you, Blake. Bye-bye, mate.
Okay, we have
Let's
no
hear your
numbers now,
prayer,
right? Yeah.
Steves.
I pray for
A
health.
wing-
That's number one.
A wing and a prayer. Yeah. Do you? Okay. You're a healthy guy. I saw a picture of you and Mark Yusko.
I'm trying.
Who was the oldest in that picture?
By the way, my connection is really bad, so I might be lagging today.
No,
No,
you're
you
not,
sound
actually.
fine.
You sound fine, Stelio.
What do you think about turnaround
Okay.
Tuesday buying the euro here, Steve? For a shot, risking about 30 or 50, something like that.
We haven't completed yet the double top target. It's at 109.70. And we also have the 61.8 at 109.99. So, whoop. Open it here.
109.99.
Yeah, 1099. Yes,
Oh, okay.
there it is. 61.8, and the double
there.
top target is a little bit lower than that. So I would be.
So you don't like
skeptical.
it? That's all right. Just say it. You
Not
would
yet.
wait. You would
I
wait
would
for.
wait a little bit more.
You'd wait. Okay.
I would wait a little bit more. Yes, yes.
Just for
I
a
would wait.
scalp, not like, you know, a 500 pip move.
And it looks quite heavy at the moment, I have to admit.
Okay, we'll see by the end of the webinar.
Yeah, we'll see.
Yeah.
But as Blake said, perhaps, you know, Trump can move things a little bit around for us today because, you know, I mean, I don't see anything that has really changed since yesterday. I mean, Euro USD is somewhat lower.
What time's his speech?
The cable has stabilized. I'm not sure, Stelio, do you know?
I do not. Sorry.
Okay.
I'll check it.
It's in several hours, I think, but let me see. Let me see if any of you. 12 p.m. New York time. Yeah. Okay. There you go. 12 p.m. New York time.
Thank you.
Okay.
Thank you.
Thank you. So it's like in what, 3.5 hours? Yes. Now the tough thing to find here is for those of you that were here yesterday. Stelio, did we have overnight anything else, by the way, to talk about?
Had a couple of minor things. So we had, in terms of data, we didn't have anything else out of US or Brexit and all that. We had Norway's GDP came in worse than expected, and yet the krona is not doing that much today. But it did come in worse than expected. We had UK average earnings index, which is something that's quite important.
Yes.
It's been very high recently. It's still printed 3.6% year on year, which is way higher than inflation. But it did
bad at all. Yeah.
Yeah, it came in slightly weaker than expected. And German ZEW economic sentiment was not as negative as expected. So things are turning around apparently in Germany. I don't know why. And remember, this is a survey on a few hundred institutional investors and analysts, and suddenly they're more optimistic than they were last month. You figure that one out. But that's it. There was very, very little again today. Another very quiet day.
Yeah, and you know that's obviously one of the reasons why we haven't had anything happening here. I mean, the cable has stabilized. It still looks to me likely that it has found a low here. As I said, having to do with the Euro USD, I would be looking for somewhat lower levels, and that's why I still believe that the Euro Pound thesis, where is it? There it is. The Euro Pound thesis can still end up playing out quite nicely. We were positive on the day. We had a nice rebound earlier today, but you know the Euro Pound has already given back all of its gains, and it's now unchanged on the day. So I still expect a push lower towards 84.80. I think it's quite a likely scenario. I mean, the price action here is telling that you know there's really no strength in this market at all. Even the RSI, I mean, has failed to even penetrate through 40, which is a good indication having to do with a downtrend. Now, since not much has changed in major pairs, let's go ahead and have a look at some of the crosses. For example, Euro-Aussie and Euro-Kiwi. So Euro-Aussie, we were talking the other week about the likely importance of this huge ascending wedge. So the Euro-Aussie did break lower, and it's currently retesting the 200 daily moving average and horizontal support resistance area here. So I would have to say that if there is one thing that looks like a decent risk reward opportunity at the moment, one of the few actually, it's not the only one, is Euros. I think that Euros is quite a decent proposition to attempt a short here. Now, having to do with the Euro Kiwi, situation is quite more complex. You can see why, because you can also see an ascending wedge here, but on the other hand, still trapped within a symmetrical triangle. And look at this. We have literally flatlined for like almost 2 weeks now. Now, having to do with the pound crosses, the pound main crosses, pound against the Aussie and against the Kiwi, as we were saying yesterday, nice breakout here in the pound Aussie, and it looks very likely that we might have continuation. And pound Kiwi also made the same move. If you remember yesterday during the webinar, I said that it's lagging behind the pound Aussie because the pound Aussie had already decisively broken out of that triangle, and the pound Kiwi was barely attempting to do so. But as you see, it has done so today. So it was a good indication that pound Kiwi would follow. So I do think that pound Aussie and pound Kiwi do look decent. Of course, now somebody can ask, how likely is it that pound Aussie and pound Kiwi will keep moving to the upside while Euro Aussie, for example, move to the downside? And yes, of course, if the Euro pound starts tanking, it can help towards that direction, but they cannot diverge for much. So that is something to take into account. But having to do with the 2 pound crosses, I think that both technical formations look quite clear. I mean, triangles, which are textbook consolidation formations, breaking to the upside. So I do think that we can at least retest the highs, which is some distance from here, before doing anything more. I just see a question about the USDMXN and if I have any thoughts on it. I don't really have many thoughts on it, because I'll tell you why. First of all, I know that I want to trade the USDMXN in the future, and I think that this is going to be a magnificent trade, right? And you can see why. I mean, you very rarely find such a well-developed formation. I mean, look at this symmetrical triangle that dates back to 2017, to the beginning of 2017. By the way, another example of a market topping at the first days of a year, first days of 2017, marked the high of the year, and not only the year, to be honest, the years to come. Now, this is clearly a symmetrical triangle, and both trend line support and resistance are well defined. Now, somebody can say that this is a nice bear flag in here, right? And I think it would be a good opportunity to trade it, because once we break through this, we also break the symmetrical triangle support. So you kill 2 birds with 1 stone. You get 2 technical events happening at once. So if we get a breakdown from this flag, just a few pips below, we have this triangle support, and if we break through it, I do think that there has to be a series of stops gathered up in the market there. Coach?
Yes, buddy.
Oh, I thought you wanted to add something.
Oh, no. It's my commodity digestive system. I didn't know I had the mute on. Pardon me.
What did you have to eat yesterday? Gold or silver?
I had some golden cookies.
Golden cookies sounds good.
I'll mute myself, buddy.
Good.
No one needs to know what's going to happen to their digestion system after 40 years of trading. Okay, I don't want to scare anyone. All right.
Speaking of the Airbnb tonight, by the way, because we have a comment from John. That's a good comment. And John, here is what you need to be watching here, having to do with the Kiwi against the dollar. It's quite simple, in my opinion. Below this intermittent trend line support, I think that, that's it. This was a corrective move and we're headed lower. Now, if the Airbnb produces a bullish outcome today and we head back towards the neckline of this inverted head and shoulders formation once again, then that's going to be a great buying opportunity as long as we make it above 64.25 and we close above it.
Let me ask you this, Steve. Could you put like a buy stop there and have it take you without it ripping off your stop on a central bank decision? Like say you had a 64.20, whatever the breakout level was, stop. You think you got filled there with your broker or what on a central bank announcement? Curious.
Yeah, you can get filled up there. Yeah, you can.
At the price, or you have to put a limit on the stop. So they say you had a, 64.24 stop. Could they fill you at 64.50?
It can happen, but my broker, I have no complaints about that. They're very liquid. I even
Well, then
manage.
that's a way to play it. Don't you think? I mean, because you're not going to be able to react with your mouse. You may as well have a buy stop in to get long on a breakout.
Listen, we're currently trading at 63.30, so we're like 100 pips lower.
Yeah.
I very much doubt that the Airbnb can cause some type of a reaction that we get, let's say, 200 pips of upside in one go. You know what I mean?
Yeah, but remember how the Aussie Kiwi bottomed? I think that was on. I'm not sure if it was the New Zealand bank or the Aussie bank, but they, how they went down like
No. I agree with you. I know exactly what you're talking about.
Yeah.
But I mean, I'd rather be in front of my computer if that happens.
Okay.
Look at the initial reaction, wait
and
to see
finesse something.
Yeah, so see some kind of a stabilization. And if I wanted it to play it the way you mentioned, I would definitely not put an order for a full position. I might do that for, let's say, a third of a position and then let myself establish the other 2/3 of the position. I mean, something like that. But one thing is for sure, there is a good chance that we're going to know today, what are the intentions of the Kiwi? I mean, does it want to continue lower, or does it want to, produce something different? Because I do believe that above 64.25, we're going to get some type of a short squeeze. I mean, the market, rightfully so, because we've been in a downtrend, is probably more positioned to the downside. So I'm pretty sure that above 64.25, the ball is going to start rolling in the same way we saw in the cable. Now, having to do with the Aussie, it's more or less an equivalent situation here. I mean, we know what the key area is. It's like 69.30. We have the 61.8% fib. We have the descending channels resistance. We have the 200 daily moving average, beautiful triple confluence of resistances. So, the Aussie needs to prove that it can penetrate through that. And until or unless it does that, I can't blame anybody for being short here. As simple as that. Okay, we could have a lot of slippage. Yeah, we can obviously. I mean, we always get some slippage in situations like that. It gives a forex broker a good way of explaining the bad slippage of the trade. Yes, that is true. But, between brokers, there is a big difference. I mean, there are brokers that, have horrible slippages and brokers that are, much, much better in that. I can tell you that for with certainty. Do central banks have any responsibility for FX having no volatility? Absolutely, Rob. Central banks are the are the ones to mostly blame about this horrible situation in the markets, because what they're trying to do is they're trying to control the economy. They're trying to control the markets because they rightfully so believe that the economic expansion is at a big extent based on asset valuations and not on real fundamentals. So they know that it is, extremely key, extremely important to protect, market valuations. And when you so heavily manipulate the stock market due to correlations, FX will, in essence, follow suit. I mean, when you have so quiet equity markets, it's not that easy to get like noisy FX markets. Public impeachment for Trump, any views on that? Grigoris is asking about the impeachment. I think it's all a charade. I mean, I don't think there is any chance something can really happen with Trump getting impeached. I think it's just, marketing, nothing else. Welcome to all countries running rates to zero. If only they ran rates at zero, but all countries are actually running negative real rates because, real rates is what matters. And like the huge majority of countries have negative or deeply negative real rates because you even have to take into account inflation, and I'm talking about the real inflation, not the manipulated inflation that they that they show. And unfortunately, inflation is a very, very, very easy metric to manipulate. Central banks manipulate inflation mostly, not only, but mostly in two different ways. One way is by adjusting the items that are measured for inflation. So, they can switch in, switch out items, theoretically speaking, to make let's say a representative basket of goods, right? But they can switch out items that get more expensive with items that are less expensive. Now the second and easier part for them, even easier part for them to manipulate inflation, is what we call hedonic adjustments, right? So for example, which is completely arbitrary. So for example, they tell you, okay, we had that item's price increased by 20%, but we judge that its properties, its quality, or whatever else improved by 30%. So, hedonically adjusting, that item is actually cheaper, right? Which is, as you understand, it's BS. Because yes, today's iPhone is a much better phone than the phone you bought 10 years ago, right? But it's still a handheld mobile phone that you buy for exactly the same reason. So if you have to pay 50% more for today's iPhone, let's say, than you had to pay for an iPhone 10 years ago, it's still a 50% price increase. Now, the fact that it's better due to technology, fine, but it's still a mobile phone. So through those two mostly methods, they manipulate inflation and presented much lower inflation than we currently have. And the reason they do that, I mean, you don't need to be like you don't need to believe to like wild theories or whatever. You can clearly understand why they have to do that, and they have to do that for three different reasons. Reason number one: taxes are very unpopular. Nobody wants to vote somebody that wants to tax them. But inflation is a tax you'd never have to vote for, right? So if they cannot tax you directly because it's politically toxic, they will tax you indirectly by having the value of your money diminish over time. Reason number two: debts almost everywhere in the world are unsustainable. And the only way you can service those debts is by the dishonest way of doing a haircut, right? Which is inflation once again. And reason number 3, don't forget that in order for us to calculate the GDP growth, we need to have the GDP deflator, right? And, higher inflation would mean lower reported real GDP, which would mean that, if you had an reported inflation of 4% instead of 2%, suddenly what you report as a 2 or 3% growth would be less than half of that. So, who wants to do that? So for those 3 reasons, they absolutely need to manipulate inflation, and they do so. Okay, let's see more questions. My analysis suggests a move above 198 of US 10 years, suggests deeper pullback targeting 225. Do you agree? Let's have a look at it. Let's have a look at the 10-year yields, since you mentioned it. Okay, so move above 198. Okay, so yeah, this might happen, but from a technical perspective, what I want to see is a breach of this channel. I mean, very often is, you draw a channel when you have price action like that after a big move lower, or the opposite, right? After a big move higher, when then you have a counter trend move. I draw a channel, and this channel is usually going to tell you if this move higher is corrective, and it's going to be a shallow retracement or something different. So for me, it's very important to see if we're going to find resistance here or not. So as you see, this channel's resistance currently passes roughly from like 2%, 2.01. I think that if we breach through the 201 level, then we can move towards like 228 or something, which is more or less what you suggest. You said 225. I have a horizontal support resistance area at 227, 228. So I would agree with you, but I first want to see this area getting taken out. Then, yes, I'm on board with what you're saying. I do think that then we can see higher yields in the short term. Okay. Until that happens, there is still a decent likelihood that instead of this, you're going to get this. Okay. So it's all about that trend line. Now, from a fundamental perspective, we potentially expect some like good news if the US-China trade deal goes through, etc. That can, definitely help yields break through this area, right? So, I mean, I do see the point from that perspective as well. It can happen. It can definitely happen. Okay. My pleasure. Yes, we do have a little rebound in data as well. Although, overall, if you look at the trend over the past few months, the trend still remains lower. I mean, we're still clearly seeing a slowdown in the economy, and being so late in the business cycle, every slowdown you get so late in the business cycle is I mean, poses a very big danger that it's going to be fatal. Fatal meaning it's going to be the one that's going to lead to the recession, right? In that sense. Okay, crude. Now, unfortunately, not much I can do to help you with crude, because what we've been saying since like 5 days ago hasn't changed. Just look at this price action, right? Even if I zoom in, look at this. Look at this. 1, 2, 3, 4, 5, 6, 7 with today consecutive days. Crude is totally unable to break through this confluence of resistances here. I mean, clearly a very, very big ceiling for crude at the moment. Now, on the other hand, somebody can say, yeah, but it's, on the other hand, it's not breaking down, right? Yes, it isn't. It isn't. So, I mean, crude has stalled here. Somebody can make the argument that we can have another push higher towards 61.8, and we might as well do. But I have to tell you that I don't know, it feels like crude might just break down from here. I mean, the indices have made a big move higher, and crude has made a much smaller move to the upside. I mean, it has completely decoupled. I mean, in the short term, yeah, it frequently still moves higher when we have a good day in the stock market. But other than that, I think it looks quite weak. So if I had to do something with crude here, which I'm not doing, I think that the risk reward definitely favors shorts at the moment. We might have another attack to the 50.5 support area. Coach, who did you say we have for an interview today? Here's the SEC, by the way, another one I wanted to show. If you remember, we were talking about the key area it was testing last week down here. Still a nice rebound from there. Momentum is not that great, but we've held that area, so not much to add here. USD NOK consolidating still below this ascending wedge. I still think that there is a chance that the USD NOK will continue to the downside, but I'd rather see something like that happen soon. The more time we spend before making another leg to the downside, the less likely that scenario will become. One more I wanted to show. The USD Chinese yuan. We were talking about it last week, saying that it is very key for the USD Chinese yuan to hold the retest of this cup and handle formation, and it actually did, right? So we said that this 697 area is strong area of support, and so far it seems to be reacting. So this looks like a decent risk reward ratio against the lows.
Well, if that turns, Steve, we'll get our S&P Nasdaq correction, because
yes, okay, if we
so
do
that's
see
an
a big
important.
Yes,
it's like a good buy there.
Yeah, it is. I mean, obviously, moving forward in phase one or whatever they want to call it, might cause this to break the downside. But from a risk reward perspective, knowing the importance of this horizontal support area, it makes sense, right? Because
there'll be no deal.
Something, I think there is going to be a deal because it's not a deal. Not for any other reason.
Yeah.
Because in order for Trump to save face, what they've done is, in essence, they've broken the deal in the first part, which is like, very, very superficial. So I'm assuming that, they're going to manage to, sign through the, very superficial stuff. And then I think if he can, he's going to find ways to postpone the second phase of the deal for after the elections, right? So
can you overlay an S&P chart over that, and people will see that this pullback, this little ABC in US dollar yuan, has been a spark for this last wave that we've had in the S&P.
Sure.
People see it, that maybe they could learn to pay attention, even if you don't trade this, right, Steve? It's a very important barometer. That's your trade war right there.
I can
on
do
one chart.
better for you. I'm going to overlay for you here the inverse of the S&P. Okay.
Look at that. It's identical. Maybe a little bit more magnitude, but the form is the same, isn't it?
Yeah, as you can see here. In the short term, as you see, of course, S&P exaggerates the move by a lot, but there is a clear.
I meant by magnitude, but the form
but there is a clear correlation in direction, right?
Yeah. So there's your lesson. This lesson costs $999.99. Okay, so you could just use your MasterCard. See what you get for free in here. Oh, I just heard I got a phone call yesterday, Steve, from the Nobel Committee. We have won the Nobel Peace Prize for Humanitarianism in the FX world.
Nice.
What, isn't that nice?
Nice.
We could
Although
put it on the website, huh?
although I'm very skeptical with the Nobel Committee. I mean, having to do with economics, which is more of my field, I have to say that at least half of the people that receive the Nobel of Economics, in my opinion, have no idea of economics. I mean, it's a
Did you see the
disgrace.
woman that won this time? And it was about good economics in bad times. I saw her interviewed yesterday. It was a woman and her husband that wrote a book. I forgot what university. Anyway, probably someone else you'll poo-poo. But
No, depends. No, some people are really worth it.
A lot of myths she dispelled.
Sealer, for example, is an excellent economist.
She made a point about, they've been talking, and Larry, I see you here. I'm looking forward to meeting you and talking to you. But she made a point about salary caps and that it doesn't affect performance. And that's like Wall Street's mantra, that if you put a salary cap on a CEO, they're not going to perform as well. And she uses salary caps in terms of professional athletes. And even though they may have a salary cap on the team and the guys can't get paid more, it doesn't affect their performance because they still go out and want to win.
Without
Isn't that interesting?
Without having read at all her analysis, I can tell you that the example that you're giving is flawed, and I'll tell you why. Because a professional athlete might have his salary capped, but he doesn't have advertisement revenue capped.
Okay, so, that's a good point.
Right. So you understand what I mean. So
yeah,
there's still incentive.
They have another revenue source, so they
exactly that might be affected by performance. Yes.
Yeah.
Yes.
Well, doesn't Jamie Dimon have a brand? He's everywhere now. He's got a brand. He's got a brand.
And by the way, a very good point from Dominic. Steve, economic knowledge isn't rated by result, just how popular the idea is, and I totally agree with that.
Yeah.
And you see the same thing with some very, very popular ideas, because sentimentally they're very popular, that resonate very much with people in their hearts, that are extremely bad economics. Like, for example, you remember the debate we almost had the other day with a guest of yours about the minimum wage. Minimum wage is something that immediately resonates in everybody's hearts. Like, why people should be working for less than X. I mean, it only makes sense to get paid at least something decent for the work you put in. But this is, from an economic perspective, like, a big fallacy.
Well, people don't believe Steve believes that the minimum wage is baloney. He's conducting interviews. We have a couple of openings at ForexAnalytix.
I can even make the argument. I can tell you as an argument that minimum wage is unethical. Because the minimum wage legally constitutes people.
All right, why don't you save this though for someone who comes from the Austrian School of Economics?
They'll tell you the same thing. Don't worry about it.
Oh no, but but stick around, and you may have some questions for Larry. So, Larry, and thank you, Steve. Sorry,
my pleasure.
I cut you off about your.
No problem.
Is that all right about the minimum wage? I'll give you a raise today, buddy.
Oh,
for the great job you did.
Go ahead. I mean,
okay, put your foot. I'm cupping my hands right here. Put your foot in there, and I'm going to give you a raise. So I'll lift you up.
Sorry, I didn't notice the time. Go ahead.
All right, that's okay. All right, Larry, I'm promoting you to panelist. And now I'm going to unmute you and looking forward to meeting you. Oh, unmute. I wonder why the unmute isn't working.
I'm gonna.
There we go.
I just unmuted myself. Does that work?
Yeah,
Yeah,
we're good,
perfect.
Larry.
You can hear me.
I can hear you loud and clear. Do you have a screen you want to share during our interview?
Oh, I really don't. I didn't realize that was a possibility. I apologize.
That's okay. Nice to meet you. Why don't you tell us a little bit about how you got involved in the business?
Dale, you want to share your screen?
I am going to do that.
Sure, Dale. Happy to. First of all, thank you for including me in this chat. I've been listening to the whole thing. It was very interesting to me. The reference to Edwin Starr, I knew it immediately. Okay. I sense that we might be of the same generation, but
I'm sorry.
No, you had to be listening to music back in the 60s and 70s to pick up on that.
Yeah, so you and I have seen quite a few cycles. I got involved in the business, let's see, 1975 as a runner on the floor of the Chicago Mercantile Exchange. What was your christening?
79 when I graduated from college. I went to New York and worked on Wall Street as a financial analyst in an M&A group, and moved on from there. Yeah.
Nice. So okay, so M&A was better than I think I was making $80 a week just working market hours and living at home with my mom in Skokie. You had a real job coming out.
Well, in New York it didn't go far. My first salary was $14,000 a year.
Yeah.
And I had the distinct pleasure of
what underpass did you live under in the city? Huh?
That was cheaper then. We had 4 of us in a 2-bedroom apartment.
Yeah. Cool.
I had the distinction of sitting right behind Dennis Levine, who went to jail, and I watched him take phone calls from Ivan Boesky as he was leaking all our deals.
Yeah.
And one of the other guys there and I threatened to call him out on it, and he told me he knew people who would kill me for $1,000. So this other guy and I said, "Hey, look,
tough house, man.
If he takes one of us out, the job of the other guy is to get retribution."
Wow, that is really a rough way to. So, and you decided to stay in the business after that?
Well, yeah, I didn't go back to Wall Street. I moved over to the investment side. So my career has been as an investor and fund manager.
Okay.
And I originally started off in venture capital and technology, and so I was investing in floppy drive manufacturers in 1983. And I did all the technology investing in private equity with 2 different firms that I was with, all the way up until about 2002 or 3. I was very fortunate. In 93, somebody gave me a business card with the internet address on it. Said, "Send this to my internet address." I said, "What's that?"
Yeah.
And then I discovered that was going to be a good business. I went and made a lot of investments there, and it worked extremely well until 2000. Some of them were bubble-like, but some of them were actually quite genuine good businesses. And in 2000, a bunch of people gave me money and said, "Go buy more internet." I said, "No, you don't want me to do that." And so I gave the money back and quit. And since then, I've been managing my own money, but it's kind of grown into a fund. And I was short the financials in the financial crisis. I didn't know about what the guys in the Big Short did. The derivatives that you could use.
What a complicated trade that was.
Yeah, it's very complicated. But I was short the financials, although I got pretty badly abused when the government outlawed short trading in September of 08, and I saw a 4,000 basis point move against my positions in 2 weeks. But But 08 was what really was kind of, was when did I become radicalized? Well, it was 08, and the GFC hit, and I was just stunned by the government response. And I started studying what does well in inflation, because they're clearly printing so much money that we're going to have massive inflation here. And I went out and I got smart about oil and gas and gold. And as time went by, it became clear to me that I couldn't figure out oil and gas. It was just too complicated. But gold was pretty straightforward as an inflation bet. And then the gold miners are a leverage on gold, or a leverage play, I should say, on gold. And so I started moving into the gold miners, and I put some money with some very good gold mining analysts and investors, and I learned from them, and ultimately grew this into a fund that I now manage that does exclusively gold and silver mining companies. So It worked
Okay.
extremely well for a couple of years. As everyone knows, we had a
2015, there were a lot of 500% winners, weren't there?
yeah.
Wasn't that
Well,
the year?
well, no, from 28 to 2011, yeah, we did well. I would say 500%. There were, yeah, if you started in 2004, which I didn't, there were a lot of winners between 2004 and 2008. Then there was a big check back. Then from 08 to 11, there was more winning, and then I ran into a buzzsaw. I misestimated the ability of the system to regenerate itself and create an even bigger credit bubble, which is what I think we now live in. And so I suffered quite badly for a number of years, but I'm either stupid or stubborn, but I haven't given up. And if you look at my, I just reposted it and I put it as my pinned tweet on Twitter. I'm at Lawrence Lepard, one word, on Twitter. You can see that the theme I'm basically playing is the theme of, credit bubbles lead to credit busts. And when credit busts occur, you're forced to, actually, if you can, Dale, if you can go to just my pinned tweet, that'd be great. You'll see the chart.
Okay.
Credit busts lead to credit, to printing of money. And as a result of printing of money, you're ultimately going to have inflation. Click on that chart there, Dale, gross GDP as against all sector debt. And what you'll see is, something that's unsustainable. Right, perfect. This, the blue line is what generates income. And the income is used to pay the interest on the red line, which is the debt growth. And something's got to give here. It's unclear when. I'm not saying I know when. Certainly haven't known to date. But this is a mathematical certainty because we've taken interest rates about as low as we can take them. Obviously, we've taken them negative in many places, and the system is just begging to blow apart. Do
you think what's happening in the overnight repo and Fed funds market
absolutely
is a canary in the coal mine?
Absolutely, it's a huge clue. It's a huge clue. I mean, the person on Twitter who has this, in my opinion, nailed the best is Luke Groman, who I subscribe to. It's a modest cost. I highly recommend it. His view, which I share, is that the central banks have no choice but to continue printing money from now until forever to keep the system going, and that they will always err on the side of that, and that as investors and others come to realize that that is the policy, then Gresham's law will kick in, which says that bad money shoves out good, and which is to say that people will shift their savings and investments into things which are going to hold their value. And in my belief, that's silver and gold mining equities will be the best.
Okay. Do you see crypto as a competitor to it?
I do. And I have a positive view of crypto. I know many gold people don't. What I like about crypto is it's teaching a new generation about Austrian economics and sound money. If you actually if you read the Bitcoin white paper, you'll see that Satoshi, whoever he is, that was a big piece of what triggered his development of the system. His belief that any money he saved was continually being debased by the government with their printing and spending. And I've long believed that, and I think it's only grown worse. And it's really kind of tragic what's happened. I mean, I look at retirees who can't get any yield. I look at people who have savings that don't buy nearly what they used to buy. I look at our healthcare costs. I look at one of your guests earlier mentioned how the inflation statistics are completely cooked. And I strongly believe that's correct. If you look at Chapwood, if you look at...
Well, I don't know, Larry. I mean, we barbecued a flat panel TV this weekend and it cost us less than a year ago.
Well, there you go. Yeah, well, I love the Fed meeting.
It was hard to digest, but...
Yeah, I love the Fed meeting where I think it was Dudley said something along the lines of, well, my iPad is cheaper.
Yeah,
and
right.
You can't eat an iPad.
Yeah, or live in one.
Yeah, exactly. So
okay, so it's obvious that we're talking about central planners running amok. You have a view on what's going to be happening with the dollar during this? Do you think the dollar is?
I'm a dollar bear. I can't.
Have you always been a dollar bear?
Well, no. I mean, a little bit earlier, and there's certain periods of time when I'm not.
Okay.
It has been the cleanest dirty shirt, right? And
right.
Brent Santiago and others have pointed out that where are you going to go when you want to have cash? I mean, But I think that and that's because of the system and the way we have it set up as a reserve currency. So there've been times when it obviously hasn't paid to be a dollar bearer. But I think eventually the twin deficits that we run, the deficit in the federal spending and the trade deficit, the dollar's going to start to trade off of those. And when it does, people are going to realize that it's enormously overvalued. In particular, though, I mean, if you look at I know you're a currency site and you guys do a lot of work on which is the right currency to be in. I kind of look at them all as, fiat pieces of paper, or claims on nothing. And I think the right currency to be in is gold or silver, or real assets.
Then let me ask you about this.
Yeah.
Poor man's gold, gold silver ratio, putting a little peak, interesting on the monthly, what it held here. Do you think that the gold silver ratio
I think that's going to, I think that's going to break, and I think silver is going to outperform gold. And I think that's actually a very, very good indication of where we are in the cycle and what the next model looks like. In fact, I use silver as an indicator for where gold is going. I don't know if you watched in 2011 when gold cratered in 2011. And if you look at it, if you go back and look at the charts, you'll see that silver cratered before gold cratered. So
it leads.
Silver very much leads gold, in my opinion. And if you look at that ratio, I think it's going to adjust substantially in favor of silver.
Well, you've been around a long time, Larry, from what you've told me. I remember this ratio trading 40.
Oh, yeah. I mean, there are times when it was 15, but that's a long time ago.
Yeah, that was centuries ago, right?
Yeah, I think it was earlier in this century it got that low.
Really?
But I could be wrong about that. I don't have the facts right in front of me.
Okay.
But it's been in the 2030 for sure, this century, I think.
Okay.
And so it's
Are you level sensitive in any of this stuff? I mean, a lot of people that believe in sound money believe this: don't wait to buy gold and wait. Is there ever a right time to be, coming out of the market?
Yeah, it all depends on your time frame and what you're trying to achieve with your investments. I mean, there's no
if you're not Rip Van Winkle.
Yeah. Well,
how about that?
Yeah. Okay. Fair enough. But I think that the average person, let me give you my time frame and what I think based on that. Okay. My time frame for the average person, the average investors, is you should be kind of making bets that are 1 to 10 year bets. You shouldn't be trying to, unless you're a professional, it's what you do all day long.
I agree with that.
You shouldn't be trying to play the swings.
Most should not even attempt this.
Right. And I think the asymmetry right now in the gold dollar bet, that cross, is so incredibly favorable for gold that, whether you buy it now or whether you bought it at 1550, it doesn't matter. And if you're waiting to get to 1420, which it might, or 1400, or who knows, even 1300, that's in the longer term scheme of things, that's going to amount to a very small rounding error, because if you look at all the fiat money that's out there, and what I believe will happen happens.
You're in the 5,000 camp?
Yeah, easily. I think very easily. I mean, the last high was 1900 in 2011. Once we take that out, then we're in a new bull market again. And this is a small market compared to the dollar asset market or the equity market or anything else. And when people start to realize that their currency is continually buying them less, this thing's going to run away.
Isn't that true? Even more true. If you put all the miners' market cap together, it wouldn't even equal IBM. That's
correct. That is correct. I mean, and IBM's a levered market cap too, by the way. The equity is probably not worth what they say it's worth.
Okay.
It is a very small area, and what needs to happen is people need to come to the realization that the government is trapped, and that in order to keep things running, they will always do which is most expedient, which is to print money. And you can see the clouds on the horizon. I mean, if Elizabeth Warren is elected, we're going to have a forgiveness of student loans. We're going to have incredible spending on health.
Darn it! I shouldn't have paid my back 4 years ago.
Exactly. Yeah. Right. I mean, it's incredible.
Yeah, but you know what? You know what it was 40 years ago?
No.
Like 4,000.
Right.
Not 400. Not
right.
40. So it just goes to show you how out of hand these are. So do you have a view on a fairly large market, which is bigger than all the bourses, and that would be debt, sovereigns? You pay attention to yields. You know, part of
Yes,
the
I
bullish
mean,
argument for gold and silver is a lack of opportunity costs with negative rates. At least you don't have to pay except for storage to own gold. Unless
yes,
you
I
use a
do. I
coffee
mean,
can.
you can't get yield anywhere else. There's a great chart in a book done by Incrementum, Ronnie Stofferle's group, that just shows that in all currencies
Oh, I
over the
interviewed
past,
them.
over the past 20 or 30 years, gold has generally appreciated about 7 or 8% a year. I mean, it has down years, don't get me wrong, but if you average out a bunch of years, and think about it, if you had something that you could buy today that you kind of look at a 30-year history of, and it's gone up 7 or 8% a year in the currency of your realm, that 7 or 8% a year is not bad. I mean, in today's yield environment, in fact, it's damn good.
That is
And
probably the real rate of inflation, somewhere there.
well, so
Larry Leopard, Steve Volge, someone
hey,
else
Steve,
who
yeah,
Steve
so
believes his training is, even though he's from Greece, his economics are Austrian. Correct, Steve?
awesome. Yeah, I like Austrians.
Indeed.
Well, I think the real rate is understated right now because I think inflation's understated. I think if you look at, and that's what it's going to take, Steve. It takes people seeing that the money they are saving on a dollar basis. I mean, the bonds they are buying, on a dollar basis, are not going to buy as much in the future. And for them to say to themselves, how do I protect myself against that? What's the alternative to a currency that can be printed to excess in order to keep a credit bubble alive? I mean, that's really the issue. The issue is we live in an enormous credit bubble right now, enormous, $14 trillion of negative debt, negative yielding debt. I mean, what more can they do or say to you to prove to you that it's a fake market? I mean,
Well, okay, you bring up fake market. I've been reading diatribes about manipulation in the precious metal market. Jim Blanchard opened that, I believe, Shanghai Exchange to emancipate precious metals from the paper market. Do you believe that central planners are also manipulating precious metal prices?
I think the answer to that is yes and no, and it's to a degree. I don't fall into the everything is completely manipulated camp because I think markets are bigger than any group of people or set of individuals. Having said that, I think the central planners have a very strong interest in suppressing the price of gold and use a lot of tricks and things to do it. I mean, there've been proven cases of it. I mean, JP Morgan, Deutsche Bank, and others have confessed to spoofing and setting false prices in the futures market for gold. So yes, there's clearly manipulation that occurs. However, over long periods of time and with lots and lots of participants, manipulations fail. I mean, there was a London gold pool in 1968 that tried to hold the price of gold at $35 as it was fixed. And there became a side market that traded much above that. And that's what basically shoved Nixon into getting off the gold standard in August of '71. So yes, I believe there's manipulation, but I don't think it's the whole story,
Okay. Yeah, I didn't even know that, Larry. See,
yeah,
I always
the other thing that's interesting to note, guys, and I think this is important, whether you call this manipulation or you just call it the way the game is set up, there are hundreds, perhaps as many as 300 claims, derivative claims, paper claims, ETF claims on every ounce of gold that exists in the world. So in a sense, think about that for a moment. In a sense, this is the world's largest game of musical chairs. There are 100 people who think they own an ounce of gold based on some paper contract. That
you talk about the GLD now?
Yeah, GLD and others.
Okay.
That think they own an ounce of gold, and in reality, they own a claim on an ounce of gold. What if everybody who had that claim said, "Okay, I'll take mine delivered right now"?
Sounds like our banks.
Right. That to me, it's the world's largest game of musical chairs. And when that, if and when that unwinds,
10 grand cash out of your bank today, Larry.
Yeah. If and when that unwinds, I think there's a really decent chance that we see not just 5,000 an ounce, but much, much higher numbers than that. So, I'm not counting on that, and I can't prove that those ratios are correct. It's based on what some insiders have said. I mean, Christian and others who've made statements at various gold conferences. But I do know that there's a lot of paper gold, and that, you know, in the kind of thing we're talking about here, you know, if Lehman Brothers sold you your paper contract and Lehman goes tits up, you know, you're not getting your gold, right?
Right.
So
Okay.
that is certainly an issue. And that's why I strongly advise anybody who's using gold as insurance, which is what I do. I mean, I view it as financial insurance, to take physical delivery or find a custodian who provides you with, you know, physical custody of the gold that you purchased.
Okay, so the miners are a little difficult proposition than just owning
Very.
physical. So I'm wondering what type of due diligence you do, Larry, because a lot of these are really highly leveraged with a lot of debt, and you know, I don't know, is silver above production costs now?
Oh yeah,
And-
barely. It depends
Okay.
on the company. I mean,
Okay.
yeah, the mining stocks are literally a minefield. It is, you know, I've been investing for my entire career, and I've never found such a difficult area to pick stocks in.
Yeah, and then they do secondaries like McEwen,
Oh, yeah.
you know,
No,
I'm not going to float any more paper.
Oh,
And then they do a secondary and dilute.
It's brutal. It's absolutely brutal. I mean, first of all, Murphy's Law applies to mining. You know, anything that can go wrong will go wrong, right? I mean, you know, the mine.
Oh, I thought it was two liars standing over a hole.
Well, there's that too. You've got that's a problem you've got as well with
Okay.
managements, and I've been subject to that. The only thing I can say is that you know, the larger miners, you know, have got a certain amount of that beaten out of them, and just because they have to. And I can also say that, you know, if you find somebody who's good at selecting them, you can significantly beat the averages, which is what I've been able to do. But it's the kind of area where you absolutely positively have to have a lot of diversity, because, you know, things are going to go wrong, and it's okay. I mean, if you're looking at a situation where you've got, you know, 10 stocks, you know, one of which will be a 10 bagger, a bunch of which will be 2 to 5 baggers, and 2 or 3 of which will go bankrupt, that'll give you a good return. But if you pick the 2 or 3, if you thought you could do it on your own and you pick the 2 or 3, you know, you're really a pretty unhappy investor.
So this is a time period I was talking about, Larry, 2015.
Yeah.
This is when you could have bought miners for, you know, some of the, they may not have been majors, but they weren't exactly juniors, for a couple of bucks, and they went to $8 or $10 on this run right here.
You know, 2016 was a lot of fun. I mean, my fund was up 85% that year.
Yeah.
At one point, it was up 180% that year. Now that was the blast off of the new bull market.
Okay.
Which we've subsequently, you know, consolidated. If you look on there, you see you got kind of a nice flag going on in Newmont.
Sideways.
Right, sideways. And, you know, my sense is when Newmont takes out 47, it's going to run like crazy, as will a lot of these other miners. And Newmont's, you know, a big one. So they're little ones, you know, that have been 10 baggers, and several in my portfolio became zeros.
So is your Twitter handle the best way
for
people to reach you?
Yeah, that really is the best way to follow me. I tweet a lot about mining. I tweet a lot about monetary economics. I tweet a lot about the time schedule that we're on here. And
how about your fund? Do you take retail money?
No, I can't, unfortunately. It's a private fund. I can take accredited money, and I've got lots of accredited investors and some small institutions in it. You know, the minimum is 50,000, and you know, you can get in and out on any given month. It's audited. You know, I've got a lot of references. Been around a long time.
Where do you trade from, Larry? Where are you from?
3 kids. I have 3 accounts. I use Fidelity as my prime broker, Interactive.
No, I'm talking about.
Where am I located?
Yeah.
I live in Wellesley, Massachusetts, and I have an office here. So
okay, let me ask you this: someone that has a belief like you do about the system imploding, and you probably have a family of kids and so forth, or are they grown? Or
yeah, I have a daughter who works for the Wall Street Journal, and I have 2 kids in college.
Okay. Do you want to ride out what you can see coming down the road from Massachusetts?
Oh, that's a great question. You know, I don't know. I mean, I believe in this country, and I believe that we're in a fourth turning, and I believe that there'll be some real unpleasantness. But I grew up in the Midwest, and I'm fundamentally, I believe in the goodness of humankind and human beings and Americans. And I think that as bad as things are likely to become, I think we'll figure it out and we'll solve these problems. It might be kind of sloppy in terms of the politics, and you look at all the vitriol that's being thrown around today. But I think on the other side of this, it'll be a lot better. I mean, the one thing that's very clear to me that's going to happen is that fiat money is going to fail. And I think
we're going to have some type of disruption, financial disruption, right? And
in my opinion, yeah.
Yeah. So, and some type of currency reset.
Right. Exactly.
And, with what's happening, and, I love America too, Larry, but there's so much anger and vitriol here while things are still being held together.
Mm-hmm.
I'm wondering if our untested generation, talking about baby boomers,
mm-hmm.
how they're going to handle being adversity. And do I want to be in the middle of it, or watching it on TV from Costa Rica?
Yeah, totally fair question. I think everybody has to make their own decision on that. I think the baby boomers actually probably will have the hardest time of it. And I'm one of them, and it's because we've had a pretty damn good life. I mean, living in the
sweet spot.
Living in the shadow of what our grandparents did in World War II, and they were a hero generation. I'm a very big believer in the fourth turning, theory of what's going on, and that's a great book.
Can you give someone just a quick review, break it down Cliff Note wise for the fourth turning?
Yeah, really quick. A book called The Fourth Turning by Howe and Strauss. Best book I've read in 15 years. Highly recommend you get it and read it. The theory is that society moves through cycles, and you have the fourth turning is the time when you have a big crisis every 80 odd years. The last one was kind of the Depression, World War II. The one before that was Civil War, and the one before that was the Revolutionary War. And the hallmark of a fourth turning is all the rules change. The old system is broken and gets destroyed, and a new, better system emerges, and it's a hero generation that brings in the new system. My belief is that this fourth turning will is occurring. It started in 2008. They generally take 20 years to happen, 20 to 25 years to happen. So we're kind of in the middle of it. And everyone can see that this system is broken, right? It's obvious. Look at our politics. Look at our money. Look at the inflation. Look at the debt. I mean, this is a really broken system, right? And, you ask 80% of Americans, they want term limits. Do we have any chance of getting that? No. Politicians go to Washington, they're making no money. They got no money. They end up worth $30 million. I mean, if that's not corruption, what is? So this has got to be fixed. And what's going to happen, in my opinion, is we're going to have a financial collapse that's going to make 1929 look like, a rounding error. And when that collapse occurs, hopefully, I pray that enough people will realize that we've got to go back to first principles, which is you've got to start with sound money. And so we'll have gold and silver as money, and we will rebuild. And the good news is that nothing will really be destroyed in this fourth turning unless we get into a war with China or Russia.
I heard we're going to be too busy with internal strife to fight a world war.
That's exactly what I think too. And so as a result, what I think will happen is, they'll try and do another currency and a new dollar, and everyone's going to go, why should we believe you? I'm only accepting silver coins. I'm only accepting gold. And, pretty soon, even the people who are at the top of the system, well, a lot of them will be deposed, and Ben Bernanke will be in the books right alongside John Laws, one of the greatest monetary frauds ever. And, we'll be on sound money again. And I think once we get on sound money, I think there's a really bright future for my kids and for, the last years of my life. But I think it's going to take some strife to get from here to sound money. Because
what a great interview.
Yeah. The people who are in the system right now and running it, trust me, they love the way it works out. I mean, Jamie Dimon loves this system, right? He makes $30 million a year.
Yeah.
So
minimum.
It'll change.
Yeah.
Like everything else, there's a cycle and it will change. And I think we're in the middle of the cycle, and that's what's scary, and it's difficult for a lot of people, but it's also an opportunity if you study it and understand it and think it through. You don't have to be a victim here. You can come out of this thing, in better shape than most. I think if you're
the Chinese definition of opportunity is
crisis and opportunity. Yeah,
exactly. Danger and opportunity.
Opportunity.
Yeah, the danger is you miss the opportunity.
Well, there's that too. Look, don't kid yourselves. There will be outright danger. There are going to be some people who are going to be badly hurt, and it's horrible. It's absolutely horrible. But don't blame it on those of us who believe in sound money. I mean, we were all along saying, hey, you know, this isn't going to work. You know, I hope the blame falls. I mean, they're going to try and shift blame. You know, I've seen people say, well, it's all you gold standard guys who are going to blow up this system. And hell no, your system's going to blow up no matter what. You know, we're talking about the alternative that's fair. You know, I mean, if you know, wages and productivity, I've got a great chart somewhere in my Twitter feed that shows wages and productivity, they tracked perfectly from 1900 to 1971. You know, the average worker made a fair deal, and that's why America was a great place. And you know, in 71, we went off the gold standard and financialization started to occur. And that's why, you know, Jamie Dimon makes 30 million bucks a year, and a guy working on the assembly line still makes, you know, barely enough to get by. You know, we've had enormous productivity growth from 71, and the average wage earner hasn't enjoyed any of it. And that's all because of fiat money. And most people just don't understand that. And it's tragic. It's absolutely tragic. I mean, people out there protesting, the people who voted for Trump, the people who, you know, are protesting who want socialism, you know, they don't understand that that's not the issue. I mean, yes, it is unfair. It's tragically unfair what's going on, but it's not because, you know, of capitalism. It's because of, you know, crony capitalism that they're getting screwed. They're getting screwed because we don't have sound money.
That darn Jekyll Island. You know, the only Jekyll I liked was Heckle and Jekyll.
Yeah.
Anyway,
you know your history, Dale.
Don't I? I mean, very important.
Yeah,
very important facts, Larry.
Most people, I'm sure, don't get these references. It's just like Edwin Starr, you know.
I know.
Most people listening to this have no idea who Edwin Starr is, and I think that song is one of the greatest anti-war protest songs ever written.
Well, anyway, you know, when I do these interviews, I have one leg in the tar pit. So this dinosaur thanks you, my trading warrior brother, for coming in. Really a pleasure to meet you, Larry.
Likewise. I hope we can do it again, and I'll be watching your site more often.
We will, buddy. So everyone, the best way to follow Larry, and now I'm saying he's a must follow. I'm following him, and you could do it at Lawrence Leopard. So keep an eye on what's happening in the fourth turning with Larry. Thank you, buddy.
Okay, thanks, Dale. Take care. Bye-bye.
All right, that's a wrap, everyone. Remember, don't just count your pips, count your blessings. You're very welcome. Jekyll in 1913 was the end of USA independence. Ben's thanking you, Larry, Brock.
Thank you, Ben.
Everyone's appreciating it. So I'm going to end it on an up note. And I like the hopeful ending and your attitude about coming through. It's like investing, right, Larry? I mean, people have to live through adversity to become successful. And
absolutely.
Yeah,
absolutely.
So we have to do it in trading. Maybe it's a good training ground for the fourth turning to have to take a few hits in the market. Yeah,
this downturn in gold has really, you know, it's gotten me in great physical shape, and it's gotten me a lot mentally tougher. You know, I mean, there's nothing like losing to make you. And what do they say? You know, failure is the greatest teacher. You know, success is dangerous. I think it was one of the.
Oh yeah, there was a superstition. If your first trade, when I was a runner on the Merck floor, I made a trade when gold was first made legal to own again. It came in at 200, and a local did a short for me, and I went, "Wow, it's that easy." And that it turned out to be bad luck for a while.
Yeah, you gave it all back, right?
They said, Dale, be careful. You should probably leave the floor for the rest of your life. Anyway.
You're going to give it all back, yeah.
All right.
Thanks a lot, Dale. I really enjoyed it. Take care. We'll see you.
Face, take it easy. We'll see everyone tomorrow. Adios. Good hunting the rest of the day.